Happy spring, Warriors. First day of spring. W.D. Gann said to look for inflection points around the change of seasons. So that's what I'm doing. Hope everyone has a great spring trading season. So if you're in our main chat, I put out a sell in the dollar last Thursday in this range. I'm looking for maybe quality, which would take it down to 102. So I'm not only looking to cover dollar shorts, but I'll be covering shorts and reversing at 102.50 in front of the Fed. It's my contention that this pullback in the dollar is just that, and that there may be some type of safe haven buying coming in, because even though the US has its issues, so does Europe. So I'm thinking that this was just the first wave, and now we get a pullback. And if we hold 102, start heading up, a measured move could take us up towards 107, 108. And if I did a fib extension of that, it could even stretch up towards the 110 level. So that's a trade I had planned going into the Fed. I think it'd be real interesting if the Fed pauses, because most people would expect the dollar to crash on something like that. And if all we do is put in a higher low, if the Fed pauses, that would be pretty bullish for the dollar. As you guys know, was bearish yen from the top up here at 138, and then rallies back to 35, failed. Now I think we're getting close to a level around this 130 level, where the yen as well as the dollar may begin to dig in its heels and start to head higher. I think a lot of the safe haven trades are pretty much getting played out. Here's your 10-year yield. You look at this and it's textbook for a 3 drive to a bottom formation. Here's 1, this could be 2, and this is 3 with a throw over. So around this 330 level, I think yields have gone far enough for now, and that they could recover back to about 370. When we're talking about Aussie, kind of bringing up the rear of the parade here, but still could stretch up towards the 68 level. I am long from last Thursday at this close, I'll be not only booking longs, but reversing to go short up there. Let's get to the gold. It had a spectacular week. As you guys know, we follow my videos. I liquidated my mining position Wednesday when gold was here, so I missed this part of the move. I still have to point out the relative weakness in silver compared to gold, and I guess you have to look at the daily. So the gold has blown through prior highs right here. This is silver. Gold blew through the highs here. I would not chase it here, especially if we get back under 1940. I think you could see 1880 to 1860 again. And then look at this, and it is diverging. But look at silver. It didn't come close to taking out this high. We're starting to have some trouble here around 50 to 61.8 back, and silver still looks bad. It's your preferred short, while gold's your preferred long. And this gold-silver ratio, I still think, has a chance to retrace 100% of this wedge, which comes up at 96. That's the rule on wedges. I asked my mentees, how much can a market retrace when it's a falling or rising wedge? And they'll say 38%, 50%, 61.8. No, the answer is 100%. So 100% could take the gold-silver ratio back up towards this 96 level. Want to cover what's happening in S&Ps in light of the banking crisis. It's holding up okay. I'd be looking to be a seller up around here, 40.60 to 4100. Some people think we could trade 42. I'll be looking to recommit to the VIX, which you guys know is buying at 18, 17 at the low, and it's my contention that we're going to have another wave to the upside. I think the regime has changed. I don't think we're going to see this kind of action again. And I'd be looking down on breaks in the next week or so back to around 22 to 21 to put on long VIX calls. When I'm talking about the gold, I also want to show you this. All right, so gold's holding up okay. The shares are about to open. And when you look at the daily, let's go to the daily, because you guys know what I sold was the miners on Thursday before Friday's big surge. So let's use GDX as a proxy. So that means I got out here and it pulled back and we rallied into this level. There's a gap here. And really, I was taught that miners should lead, not lag or follow. And here we are, just a recovery, more like silver than gold. And, around 61.8. So I wouldn't be chasing miners either. I'll give you kind of a contrarian call. If gold pulls back and it gets deep to like 1800 and silver retests the lows again, why can't we have something like this from here to get us down to here to be buying the miners down at 24? So I think that's a possibility. I want to lay it out to you. It's up to you what you do with your own portfolio. But I have to say that trade selection's everything. And by trade selection, you want to be long the relative strength. You want to be short the relative weakness. Don't buy the weakness hoping it catches up to the strength, although strength could carry it. And don't buy the weakness. Don't sell the strength, short the strength, hoping it'll catch up with what's weak. Here's an example. I think I'll leave you guys with this. One of the other havens that's been spectacular during this financial crisis that we're in now has been the crypto market. And when I look at a 4-hour chart right now, I say book them, Dano, and actually put out a sell in the room in Ethereum. So here you go. This is trade selection. So look at this divergence in Bitcoin, but obviously it's much stronger than Ethereum because Ethereum double topped here and the RSI couldn't even get close. Glaring divergence here. So be careful with your crypto. I think there's going to be a big break coming there as well. And the relative weakness at this time is Ethereum. Look at that chart, well off its highs compared to Bitcoin. I think they'll both work. This one will pay bigger, but Ethereum is demonstrating more relative weakness and it's going to be more forgiving if I'm a bit early. So I invite everyone to join us every day. Mike and I are doing something here, trying to keep people informed about what's going on, at least our views of it. And I wish everyone a great spring trading season. It's a time for change and renewal. Try something different, like setting up an account with TradeView Markets and see if a different broker could change what's happening for you. I know being in our main room can really be a really paradigm shift for you guys to hang out here at TradeGATEHub.com. So good luck. I'll be back with you Wednesday. I'll be with Mike tomorrow for the Mike and Dale show. Mike will be up in an hour and a half, give you his analysis and what stocks he's trading. Guy finds a lot of interesting entries and exits, and look forward to hanging out with all you guys this spring, and let's see if we get a shift in the markets based upon a change in seasons, something to pay attention to. Don't just count your pips, count your blessings.